Hi, welcome folks, welcome guys, welcome traders. Today is the 2nd of May and I'm getting ready to trade BTC USDT or USD on Hyperliquid. I'm getting ready right now to trade the New York session, and I trade New York session because I like the sweep on liquidity and the fair value gap entry during that session. Usually if it's a good day, we have a repetitive action. And before we dive in, I'm gonna make sure to see if there is any major news announcement today, Friday. Most of the news has been over, like NFP, non-farm employment, NFE, and employment rates. It actually came out higher than expected. If higher than expected, dollar is supposed to be stronger, but quick manipulation could send dollar lower instead of higher, and then push all the other assets higher or lower. But we already have the quick move where dollar went lower, like I was saying, and now assets are going higher, quick manipulation and going. So I'll be expecting at some point of time to either sell or buy. But the current meta is bullish with price target around 99k in BTC. But if we were to go below, a 94 retest could be a possibility on a daily chart. Sweeping below to the hourly chart, there is now a red candle in the hourly chart with a possible entry in the fair value gap around 96k 800. There is a small engulfing around 96k 600 that could come and sweep liquidity, and another huge bar around 95k 800 that could be a level of liquidity. So the previous day high is at 97k 500, and the previous day low it's around 94k 800, close to 95k, with a breaker block between 95k round price. Today midnight opening at 97k 500 with an engulfing candle around that 97k 200. So this could be a level where price could come to get in. There is a fair value gap right at the midnight, right at the 130 open that could send price being bearish. Could be a good entry. And let me dive into lower time frame to see what's going on. A better fair value gap, it's a better fair value gap is around 97 and 97 100. But I'd like to sweep on liquidity at the previous day high, which already happened around 9 p.m. 9 a.m. New York time. So if that sweep on liquidity remains, then the other block at 96k could be retested, and then we could see higher prices from there on. Since the day looks bullish and London seems to have done the low of the day after sweeping Asian low. So I'm gonna keep watching this market in lower time frame, see if I get a good entry. As we can see, price is literally rejecting quickly from that fair value gap. So this could be a good entry if price were to be bullish or bearish. Currently highlighting the fair value gap. And price is diving into the fair value gap, rejecting current level. So I'm gonna open a $2,500 trade. Okay, I think I opened the trade a little bit lower. Okay, it was a limit order. And limit order got closed already. I couldn't open the trade actually. I had to set it up again. But the fair value gap is rejected in the 5-minute chart. And on the 2-minute chart, 3-minute chart, let me highlight another fair value gap to say we get a double entry and the level of liquidity above. And there we go. Let me place the trade. With my stop loss way higher currently than it's supposed to be. So I'm gonna bring it back down around 97k with a little bit of breathing room around 97k 400. The total size I'm willing to open today is around $8,000. So 2,500 is just a test on the liquidity to see what's actually gonna happen in a few days after the manipulation that occurred around 8:30 New York opening. The manipulation went higher, lower, then we see price proceed even higher after that. And it will be just normal to see a sweep on liquidity if this was an engulfing candle. But as here we have two inverted fair value gap, one here with the other one remaining above. Getting close to the levels, I'm gonna get ready to open another 2,500. On top of the 2,500 that was there, that could be another $6,000 trade. After opening all my trade, I might set up a few take profit as at level of 96k and level of 96k 300 and level of 96k round. Market is going straight up bearish right now, giving me a profit of $3, but I'm still not fully in the needed size that I need. If price proceed and create a fair value gap after this entry, I might double down on my size. The current candle closes bearish. It could be having another fair value gap around 96k 900 and 96k 800. Currently, price have come back to a level where it has been previously bullish, and we could be targeting this level before a snapback. for another retracement to the upside. So price is showing a lot of bullish momentum, even after hitting that bullish fair value gap, getting close to our previous order block, with the major order block around 96K400. Jumping into the 1 minute time frame. 1 minute time frame, we can see the green candle is pushing toward the new fair value gap created, where there is a level of a very fair value gap currently being filled. Sweep in liquidity around 96K800. The 1 minute fair value gap showing strength. Another price pushing toward that fair value gap is what we do not want to see. Currently, for the past 24 hours, shorts have been wrecked more than long. And for the past 12 hours, shorts have $21 million in liquidation, while longs have 33 million in liquidation. For the last 4 hours, shorts are still being liquidated with 9 million compared to longs at 7 million. In the past hour since the manipulation occurred, shorts are taking the L again with 2 million liquidation and long paying 800, showing a lot of traders are pushing the long. Binance with 61% shorts, Bybit wrecking longs with 50%, and this shows since they have been hacked, they have been manipulating the market a lot to get back their money, while every other exchange are showing shorts being liquidated. And it shows in the chart the manipulation occurring. Meanwhile, shorts market have been quickly diving toward the short buy and then taking forever to push toward the long side, which implies that market makers are taking the time to let a lot of short trades being built up on the market. So knowing that I'm gonna reduce my trade size to 1,500, place a short order, and then closing my stop loss and reopening the stop loss, which will be worth $30 and will be placed way higher again when I drop it down to the levels. So basically, longs are the way to go right now, and my whole trade size is about 4,000. And at last, I'm gonna add the last 4,000 that is needed when price gets to the level of 97,100. So I'm gonna put a limit order 97,150 and put like a stop loss of $20. And these are going to be my trades for the day. One minute short is rejecting into an inverted fair value gap so quick. Sometimes it's best to open the trade as fast as you can to the size that you desire, you require, so that you can take full profit at any time needed. My current expectation loss is $13, $13. The expectation profit at $41. Calvin saying market maker takes the time for short order to be built up, and we can see the footprint slowly coming in the market with huge candles on the 1 minute chart before we get a mega structure, mega candle in the higher time frame. So this is a build up in liquidity down and above, below and above of the previous accumulation, and then we get a manipulation before displacement, either toward the lower side or toward the higher side. Currently, in that manipulation, all we can tell is the liquidity level sitting around 97K and the liquidity level sitting below New York. And for the liquidity below New York to be swept, either London afternoon session could sweep that liquidity or could target the equal highs after the sweep of liquidity above Asian session. But London seeming to have done the low of the day, with Asian being a training market who expect the sweep on liquidity happen during London to push price higher like it did, or to have a better entry toward the downside around the 50% level of the Asian session. But it has been playing as support, key support level, which could imply that the current day is bullish still and could send price higher, even though the news came out bullish for USD. And this is the life we live in, full of manipulation all over. Anybody wondering where I'm getting all these data from? Is on my trading view charts where I have different sessions highlighted. In the near future, I'll be sharing my trading view chart as well, if I get enough like in this video for the insight I'm providing. Uh, The current bullish fair value gap is really rejecting price at a higher rate. Every time it dives in, it rejects the price, which could imply that there is a strong resistance level or a strong support level, at this 96K700 level. This could further be an issue because there is an engulfing pattern in the hourly chart or 15-minute chart with price level being around 97K200. Level that we really want to see fill before diving below again. So either way, I'm going to cut this trade short soon. I'm going to cut it long and take my profits. If price keep rejecting around the 97K, 96K700. I guys been before. I've been seeing a build up in liquidity in the 5-minute chart and the lower time frame, which might end up pushing price higher during a manipulation. And there you go, the 5-minute candle, the 15-minute candle, showing displacement already. Refresh. Institutional level, like the 500 level. So my stop loss should really be below that if I want to be in the safe, above that if I want to be in the safe. So from 130 to from 1 a.m. to 2 p.m. USDC, which is 9 a.m. New York time. Longs has been liquidated of 1,024 million, and shorts has been liquidated of 1,070 million. Meanwhile, the market has been, since the last hour, more bearish than bullish. Funny how shorts are getting liquidated while the market has been more bearish than bullish. And there we go with the candle. So London session close started quick and pushed straight up back to the Asian level with no sign of being bearish again. This was the market makers and market makers again. So price could proceed toward a higher price at this level. Trend engulfing pattern that keeps on rejecting in fair value gaps with no fair value gap present on this level. So there is a build up in liquidity below here. And after the manipulation occur, all we wish to see now is a straight up sell toward this level. Currently, right after the opening of 2 p.m., right after the opening of 10 a.m., shorts has lost 3 million in liquidation, showing that the money is in the short side for the longs to be taken. Usually, I'm gonna add a quick volume analysis to this and see where we get a spike in liquidity, spike in volume, like around this price. Quick spike here. It's very slow. It's very low. The volume is very low, showing there might still be some build up happening before we switch sides. This is an average volume. This could have pushed long, opening more side, more trade. Really big toad. Currently, I'm in a trade of 1 to 2 or 1 2.19, and I'm only putting it to break even after I reach 1 to 1, because right now we're in a full size position open and cannot risk to have a losing trade. Currently making $21, which is 8%, 2% of my account, and close 3% of my account. So if I was risking 1%, I just made 3% of my account, which is already great to start the day with. More than the bread and butter that is needed. So I'm way too paranoid to hold these trades. But still we have liquidity level that we're waiting for to hit. And again, the price is rejecting from that bullish fair value gap that was highlighted before. Hinting again that price could be bullish than bearish. Lot of green market order, a lot of bullish order book. The engulfing here has been cleared. We drop to lower time frame to see what's going on. We have a small gap, and any close above that gap is definitely bullish. The wicks is bigger than the candle, facing again to a bullish stance. Wow, that's definitely what I want to be good bearish then. We're back to 2% of the account. Lot of build up in liquidity below 96K600 that I really want to see get targeted. And a breakdown below this level could send price toward the 96K. Now we need to look for candle closes. The 1 minute candle close has shown that the bearish stand could still be alive. 3 minute candle close have a bigger body than the wick. The 3 minute candle close has an inverted fair value gap. Two inverted fair value gaps where we cannot allow price to get back to this level anymore. So if we want to stay bearish, we want the fair value gap currently being created to stay the 3 minute charts. After these levels, anything below that could send price higher to the fair value gap that have been used as a support since 8:30 opening New York time. The game plan. Three-minute shot, not willing to create the fair value gap. Definitely clearing the liquidity in that levels. Trading today is highly difficult. The gap being closed. One-minute shot will be showing a displacement, and the displacement with a close candle. Everything we did not want to see. We're now price sitting above the gap. Next target again, $97,200. But we cannot hold this trade to that level. So we are gonna close it right after the few candle, the 1 minute candle closes. Fair value gap is very strong. Fair value gap very strong. Fair value gap strong as hell. There you go. The level that has been showing support over and over and over and over, making a higher, 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 higher lows, higher lows, higher lows, higher lows, higher lows, higher lows, higher lows. On a trend line, we'll be having the close like this. Pretty tough day to be bearish. Coin glass, 1 hours past, 3 million short dollar of short being liquidated. Meanwhile, $1,027 of long being liquidated, showing that the money is towards the long side. Hell yeah. I think 3% of the account was what I was given today by the market. Even this red candle won't survive after this price displacement in the 1 minute chart. Unless I'm being wrong. which is not so sure. As we can see, we have more lower lows here, higher lows, but it's not as strong as seems to be willing. And this structure is highly bullish as the induced traders in errors. And we can see price rejecting from the inverted fair value gap and the fair value gap, the bullish one. Not even diving into it, barely touching it. Closing above the fair value gap again. Inverted fair value gap. Support level all around these prices. Trend line liquidity. Anything below this will be a take profit for bears. And market maker will not allow this to happen. Liquidity have been already taken multiple times in this area. Like I said, market maker will not allow price to dip below those levels as they have their own orders placed around those levels. For the tough accumulation, very boring trading day. Not even looking like a Friday. Really, this market I like it at all today. Look at this. I think that's the end of the trading day. Very favorite gaps all over the top, planning to be supports. Last opening over trade, got from price don't want to go toward my side, but I'll have to cut into a loss. Support, support, support. Higher highs, higher highs, higher highs. Liquidity level, hashed, liquidity level, hashed, hashed, hashed. What the hell, this bullshit. One, two, three, four green candle in a row. Currently, shorts has been close to the liquidity of 4 million and on the 24 hours close to 100 million. Market makers wanna see the 100 million liquidation mark. And now it is happening in the range of $400. And losing 2% of their account. Very boring.